Good afternoon, everyone, and thank you for joining us for today's credit presentation. My name is Migdalia Gomez. I'm the AVP of Community Engagement at the Harvard University Employees Credit Union. And I'll go through a little bit of logistics. I know most of you are probably very familiar with Zoom at this point, but just in case we have some newbies, I want to make sure we're all on the same page. So we are on Zoom webinar, meaning that you are not going to be on video. You don't have to worry about being on video. You also don't have to worry about possibly having lunch or anything happening in the background. We will not be able to hear that. However, we do want to make sure that any questions you have are being answered. So we will be using the Q&A today. To submit any questions, you can just use the Q&A feature. And just to make sure that you're comfortable using it, that you know where it is, please let me know, where are you joining us from today? So in the Q&A, please let me know, where are you joining us from today? And note that you can also submit questions anonymously if you prefer to do that as well. So please let me know using the Q&A, where are you joining us from? That will help for two reasons. One, I'll know that you can hear me. I know that you are able to submit questions, and also that it's working properly, but also it will give you the opportunity to submit some questions. So great. Okay, so I see NEBH. I see someone from BILH in Boston. Thank you so much. I really appreciate that. And just like you let me know where you're joining from, feel free to use the Q&A through today. BID Milton, thank you. Thank you, everyone. And as I said, you can also submit anonymously if you'd like. We are recording the webinar, so you will get an email probably, I think, today's Wednesday, so most definitely by the end of the week, you'll get an email with the recording. We post everything on our YouTube channel, which is youtube.com/myhuecu. So you'll get an email with that link directly, or if you want to just follow us, you are welcome to do that and subscribe to our YouTube channel. In addition, you'll get the email, which will also have a link to the slides. So you'll have all of that access, and that will be sent to you by the end of the week. And you also will get a quick little survey. Help us be better. Please let us know, what could we do to improve? It's a very quick short survey. So I mentioned that I work at the Harvard University Employees Credit Union, but for those that may not be familiar, credit unions are very similar to banks when it comes to products and essentially the concept. We're both financial institutions. Credit unions have similar products, if not usually the same as banks. So for us, we have credit cards, student loans, mortgages, auto loans, savings accounts, CDs, just as a for-profit financial institution. But the biggest difference between a credit union and a not-for-profit, a credit union and a bank is that credit unions are not for profit. So when we do make profit, we give it back to our members. We offer free personal finance education, such as these presentations. We also are able to offer lower rates on loans, higher rates on savings, and really are able to build a relationship with our members. And that is a relationship that will last for as long as you're members. And with credit unions, you need to have an affiliation to be able to join that credit union. For us as Harvard's not-for-profit financial institution, anyone that works at a teaching hospital that's associated with Harvard is eligible to be members. And once you're a member for life, even if you were to leave your employer or move on to a different opportunity or retire. That's all I will say specifically about the credit union, but if you have any other questions, please let us know. I do often get the question, well, where exactly are you located? I do want to mention that we do have a new branch that is opening next month in October, which is so weird to say. It's already going to be October on Saturday. And we will have a new branch. So in the next couple of weeks, you'll hear more about the actual date, but that will be on Brookline Ave. If you know where the Longwood Food Court is, it's going to be across that area. If you know where Poke Bowl is, I always call it Poke Works is, it's sort of next to that on the corner underneath Jocelyn's Diabetes Center. And as a not-for-profit, one of the benefits that we offer is that we provide free financial counseling, and that all of you will have access to that. You do not need to be a member. You can access that, the free financial counseling, including credit counseling. You have access to free credit counseling by accredited credit counselors. And we also have workshops like these, different worksheets on our website. We have an online educational portal that you can create an account, take credit courses, and they're fairly short. They're about 10 to 15 minutes, so not too much of a time commitment, but you'll get a lot of good additional information. And you can access all of that at huecu.org/thrive. Again, that's hbcu.org/thrive. So we're going to jump into credit and exactly what it is. How does credit work? So credit is, I like to start off with the impact and like, why do we care about this credit? Why are we talking about credit? Now, when it comes to credit, it's always, it's always great to have a higher credit score, but really when it's most important is when you need credit. Because if I have a 600 credit score, but I'm not borrowing any loans, I'm not utilizing credit, it's not ideal. I still want to have a higher credit score if I can, but at that point in time, it may not have as much of an impact. It's important when you're perhaps renting an apartment, sometimes utility companies, insurance companies, depending on your state. In Massachusetts, insurance companies and utility companies will not, your credit score will not impact your ability to get those services. But depending on the state that you are in, some states will have different rules. But in Massachusetts, we're much more consumer focused, and that usually is not the case. Here's an example though, and this is, it's somewhat of a dated example, but the concept is what's most important. We have an example here, and this is directly pulled from the FICO website, where there's a car loan, and the car loan is for $25,000. And what this lender does is tiered pricing, which means the higher the person's credit score, the lower the interest rate that they will pay. Some financial institutions will do this across the board for all of their products. Some won't do that. Some will just do, once you are eligible, that's the interest rate that you're eligible for, regardless of your credit score. For us at the credit union, that's what we do for most of our products. So for our mortgages, our auto loans, once you qualify, and that's the rate that you receive. But there are times, even using us as an example, that yes, you may qualify for our current mortgage rate, but your credit score can impact your PMI, your primary mortgage insurance. So there are other ways that credit score could impact a product that you're borrowing money for. Now, here we see that someone that has a 600, their credit score will give them an APR, an annual percentage rate of 16.28. So for that $25,000 car, this individual is paying $882 a month versus someone who has an 800 score, they're paying $741. So the person with the lower credit score is going to end up paying in just 1 year, almost $2,000 more. Now, after, in this case, a 3-year loan, that's about $5,000 more. So this is really where credit can really help us save money. And especially now in this market that we're living through, we've seen that rates are going up, and having that higher credit score can potentially save you a significant amount of money. Don't know about you, but I, for one, would definitely prefer to have $5,000 in my bank account versus having to pay that in additional interest. Now, I do get the question often like, well, what is credit? Does using my debit card impact credit? And credit is not money that you already have. It's really money that you are borrowing. So if you go to a store and they ask you debit or credit, or you swipe your debit card as a credit card, that will not impact your credit. It has to be when you're ultimately borrowing the money. The reason for that is, behind the scenes, it's just if you're using a debit card and saying that it's credit, it's a matter of how that business accesses the funds. For your purposes, debit is always coming out of your checking account. Credit is when it's money that's borrowed, and that is when it will impact your credit score. Now, a lot of times we don't know really who's collecting this information. I know this is something that we often get the question. It's like, well, who has this information on me? Now, when we don't know something, for most of us, we tend to go online and Google it. I think that's across the board. I give these presentations to students, to individuals that are close to retirement, and sort of across the board, we've all started go to Google if we don't know something. For lenders, if you are applying for a loan with them, they may not have your full financial information. They know very little perhaps about you. So instead of Googling you, if you will, they're going to go to the credit bureaus. These are 3 entities, and there are more than 3, but the 3 big ones are Equifax, TransUnion, and Experian. And these 3 entities are the credit bureaus that are collecting information on the amount of debt that you have, your payment history, your employer, past addresses and current address that you have. And all this information is being collected. Now, with that information, there are two other organizations, which we'll talk about shortly, FICO and Vantage. And they are the ones that are then taking that information to calculate your credit score. A lot of times people will think that we only have one credit score or one credit report, but you actually have multiple because there are different entities that are collecting your information. As a result, all credit reports are not necessarily the same. If I have a credit report, which I mean, we all do, we have a credit report with TransUnion, and then we have another one with Equifax, that doesn't mean that it's the same information. For most of us, it will tend to be more or less very similar. But just like you can Google something or go to Bing or maybe even another search engine, the information on those pages will be similar, but not exactly identical. Reason is they each have their own algorithms, their own way of producing the information. Additionally, when you borrow a loan or utilize credit card, that doesn't mean that all that information is being reported to all of the bureaus. Some companies, especially smaller ones, may only report to one of the credit bureaus. So for example, if I have a car loan, that car loan could be just on TransUnion credit report. There's no requirement for my lender to provide my information to all of the credit bureaus. That's why it's very important to check all of your credit reports and compare them. That's okay if one has something that another one doesn't. You are more interested in, is the information accurate? I know I'm going through a lot of information today. Feel free to use the Q&A at any point, and I will take breaks throughout to answer any questions. So what exactly goes on the credit report? I mentioned it briefly, but I like to always list it out. A lot of information on, most of it is going to be on the debt. The amount that you have that's outstanding, your payment history, account history. So if an account has been closed, that will appear on your credit report. How long it stays on your credit report, we'll see shortly. But for the most part, if an account was in the last 7 years or so, even if it's no longer being used, it will still appear on your credit report. Collections account, meaning if I perhaps didn't pay a bill, whether that's a utility bill or a credit bill, the company may send my information to a collection agency, and that collection agency is working to collect the debt that I owe. There's usually a substantial fee, about 30% that's charged on top of the debt. And it also negatively impacts your credit report and the credit score. And I'll show examples of those shortly. Annualcreditreport.com. This is the only source to get your free credit report that's authorized by federal law. I know it can be a little tricky because it's a .com, but this is where you can go. And I will put this in the chat, but I highly encourage everyone, maybe put this on the to-do list for this weekend, or maybe to do it today. Pull your credit report. You want to make sure you're pulling your credit report from a secure connection. Don't do this at a public Wi-Fi. Don't do this, anywhere that someone can access your information, because you're going to be putting in your social security number, your date of birth, employee information. You're putting in a lot of information that's personal, and you don't want anyone to access that. And we actually at the credit union are doing a fraud and preventing fraud and scams webinar in a couple of weeks. You're welcome to sign up for that to learn, if your information is compromised, sort of what you can do. And I will put the link of where you can register for that workshop in the chat as well. Once you go to annualcreditreport.com, you can get your credit report for free from each of the 3 bureaus once a year. It is up to you if you want to go today and pull all 3, or if you prefer to pull one today, another one 4 months from now, another one 4 months later, and then you're in a cycle that every 4 months you're pulling your credit report. Whichever way you're going to go, just make sure that you're taking the time to review it. It's not necessarily a fun task. Nobody wants to I'm going to sit down, pull my credit report, really exciting evening, but it is a task that's going to put you in power. Because many times, and I've seen this with individuals, they wait until they need credit to look at their credit report. And by that time, if they need to make any changes, if there's something that's inaccurate, it can take months to make those changes. And at that point, if this is when I need to borrow, I may not have the time. Time may not be on my side, so I could lose out on a better interest rate because of not having corrected that beforehand. It also empowers you because you're not waiting to see if you're going to be approved for a product. Most likely, if you have a good credit score, if you know what's on your credit report, you'll probably know if you'll be approved or not. And also, sometimes it could even be a faster process if your information seems to be very accurate. You may qualify for an auto approval with some of the lenders. Again, it's annualcreditreport.com. You will get your credit report for free. Your credit score you would have to pay for. But for most of us, we get our credit score for free through our financial institutions, credit card companies. You haven't activated that yet. Log on to their website, see if it's an option. For most of them, it is. You just have to authorize it, and then it will appear on your mobile app. I get often the question, well, do I need to pull my credit report if I do get my credit score and I see that information? I still recommend pulling your credit report because the information that's on apps or on your financial institution's website, that is a summary. That's not the actual credit report. It's pieces of your credit report. They're getting that information from the credit report. So you would be able to see the source of where they're getting that information. And checking your own credit report will not impact your score negatively or positively. Hopefully, I should say, hopefully positively, because then you'll correct anything that's wrong. But the act of pulling your credit report will not impact your credit score because you're doing that for educational purposes. You're not applying for any products, and you as a consumer have access to it. That's a right that you have to see your credit report. Here's a sample of a credit report. Couple of different things. It is outdated. It's from 2017, but I keep it because the information is still the same. Doesn't really matter the year. The information that's being pulled is still accurate in the sense that it's the components that I want us to focus on. When you pull your credit report and when a lender pulls a credit report, they see things a little bit different. But again, concept-wise, the pieces will be more or less similar. You'll always see the different accounts that you have. In this example, I could see that this was a credit card for our member, which is why it shows us Harvard University Employees Credit Union. I could see when the account was open. I can see that account is currently open, currently making payments. Can also see that the highest balance that this person has had is $5,429. I can also see their credit limit is only $5,500. So as a lender, that's a bit of a flag. Even though, yes, the current balance is $4,200, at some point it was very, very close to their credit limit, and that could negatively impact that individual. I can also see the type of account that it is, and here we see that it's a revolving account. Revolving accounts are accounts that are not every month the balance changes. It revolves based off of your use. So for a credit card, if it's a slow month, maybe I didn't go out as much, my balance may be lower. If it's maybe during the holidays or the summer months, my balance could be higher. It's revolving. Installment loans are accounts that the amount more or less is the same month to month. So think of a mortgage, a car loan. Those are installment accounts. Here's an example of another piece of the same, I believe it was the same individual's credit report, but if not, it could have been someone else's, but the concept is what's important. This is a utility bill. A lot of times people do not realize that utility bills, and as some of you may know, medical debt may also appear on a credit report because that is then sent, the bill is not paid, then it's sent to a collection agency. That collection agency reports it to the credit bureaus. The reason they report it is because now it's impacting your credit score, and therefore most people are more likely to pay that debt because they don't want their credit score negatively impacted. In this example, the balance is $300. This individual just didn't know. They had no idea. I believe the story was that they had moved and they just didn't know that this was still on their account. Once they resolved it, their credit score went up. So it's really important to pull your credit report for that reason, just to see, is there something that's outstanding that I should perhaps pay down? And, in this case, it was $300. So it was a manageable amount for this individual. And I see some questions coming in. Please do keep them coming in. I will take a moment and I'll take a moment to answer them depending on where I am on the presentation, but I do see those questions, so please keep them coming. I mentioned earlier that information on the credit report will stay even when you've closed an account. This chart just shows roughly how long the information stays. 7 years is a good number. If you're not quite sure, most information stays on for about 7 years. If the account is open, you're utilizing it, that's indefinitely because I'm still using it. A closed account, that it was a closed in good standing, that's about 10 years. And bankruptcy, 10 years. Credit inquiries, that's 2 years. So if I were to apply for multiple credit cards or multiple loans, each time I apply, that's considered an inquiry. And that inquiry is going to negatively impact my credit score, which I'll talk about shortly, but it also will stay on my credit report. So if a lender pulls my credit report, they are going to be able to see how often I have been applying for credit. And this can be an indicator to the lender. If I applied for credit every month for the past 2 years, that may be an indicator to the lender like, why is McDolly applying for credit so often? Perhaps I may not be a person that they may want to lend to. They may be like, oh, she's looking for too much debt. She may not be able to take on that additional debt. Of course, there are times that you may be shopping around. And as long as you shop around, so let's say I'm applying for a mortgage, but I want to know what rate I'm going to get, I could apply to multiple lenders. And typically you want to do that within a 2-week period so that that counts as one inquiry. So the lenders will be able to see, okay, she applied for multiple mortgages in July. Seems like she was and that's understandable. You can basically deduct, okay, applied for multiple mortgages in July, was looking to see what her mortgage rate would be, or car loan, auto loan, credit card, etc. If there are mistakes on your credit report, it happens. You have a couple of different options, but the first one really is contact. I would actually start with the middle one here is contact your lender and see if it's something that they can correct. It's usually the easiest option. For example, if you made a payment and they marked it as missed, which doesn't happen that often, but it could happen, depends, especially, different systems, timings, and such. Contact the lender, see if they can retroactively make that update. Many times they can. So it's not unheard of to ask, just ask. It could be the easiest way to solve that error. If you contact the lender and there's a little bit of hesitation, you're not sure if they're going to correct it, you can also contact the credit bureaus directly. Now, to contact the credit bureaus, there are a couple of sample letters at the Consumer FTC website, which is consumer.ftc.gov, or you can just contact them directly via phone and explain your situation. When you contact the credit bureaus, and again, the big three are Equifax, TransUnion, and Experian. When you contact them, have to contact each one individually, they have to, by law, investigate within 30 days. Doesn't have to be resolved, but it does have to be investigated. So that at least you know that the clock is starting. They'll reach out to the lender, they'll do that process for you. And as with any time that you're correcting any error or working with any business, you always want to follow up if you don't hear within a certain time period, or just ask, how long should I wait, or when will I hear back? Depending on what the error is, some errors are easier to resolve than others. So they may be a little bit quicker of a turnaround time. There are times that our information may be compromised, unfortunately. And if that's the case, you have a couple of different options to help keep your information secure. Now, when I say compromise, it could be maybe your social security number was hacked or was leaked. An unsecure email went out and your information was a part of that. And you're concerned, understandably. You don't want someone opening accounts under your name, because that's really why we care about our information being exposed, because people then are going to take that, hackers will take that and open accounts. And, it's not that just that they're opening accounts, they're opening cards, charging and not paying it back in full. So they're living this whole life at your expense. So what you could do is you can do two things. You can set up a fraud alert, which essentially is letting the lender know, hey, my information was compromised. Please go through additional steps to verify my identity. An alert typically lasts on your credit report for about 2 years. It does vary. You do have to do it specifically through each lender, but with fraud alerts, someone can still you can still apply for a credit card. It just means additional verification steps. A credit freeze, on the other hand, is much more difficult to open accounts. if you freeze your credit, what you are doing is saying, I don't want anyone, yourself included, to open an account under my name unless they provide the credit PIN or you provide that credit PIN. So each of the bureaus will give you a PIN, which will then help you unfreeze your credit, if you will. Typically, if you have your credit frozen and you apply for a loan and don't unfreeze it beforehand, most likely you'll be denied because they can't access your credit report. You're literally, it's a red, think of it as a red stoplight. You can't move forward. It's frozen. An alert is more like a yellow. It's like, yeah, you can go, proceed with caution. And at any point, you can unfreeze your credit as long as you have your PIN. You could do it permanently, you can unfreeze it, or you can unfreeze it during a period when you know you're going to be applying for credit. Okay, so a couple of questions that have come in. One is about managing your score. So we're actually going to get into that shortly. And then there was another question that came in about applying for hardship affecting your credit score. If the person that submitted that wouldn't mind putting a little bit more information, what type of hardship, if it's a student loan hardship, a mortgage just to provide a little bit more information before I can answer that. Thank you. For the credit score, I mentioned this at the beginning, but I want to go back to it to make sure we're all on the same page. So we have 3 big credit bureaus: Equifax, TransUnion, and Experian. These 3 credit bureaus are collecting your information that goes onto your credit report. That information is what we saw: the debts that you owe, the payment history, your name, employer, etc. That information is then shared with 2 companies, independent entities, FICO and Vantage Score. And these are the ones that are creating or calculating, I should say, your credit score. The higher the credit score, the better. But that doesn't mean that a lower credit score isn't something you can work on. There are many things that you can do, and we'll talk about that shortly. With your credit score, even though we typically say, what's your credit score? What is a credit score? You have multiple. So I could have I have an Experian FICO score, but I also have an Experian Vantage score. Think of FICO and Vantage as your Pepsi and Coca-Cola, if you will, as your Google and your Bing. They're competitors. They each do things a little bit different, but they're somewhat similar. So the score that you have with FICO isn't necessarily the score you have with Vantage. The score that you have with Experian isn't necessarily the score that you have with TransUnion. That is why at times you may apply for a loan and think, or even tell the lender, but I checked my credit. My credit is 750. How are you telling me that it's at 740? That could be why. You can always ask, and now they usually will disclose what type of credit, what credit bureau they're utilizing, and if it's a FICO or a Vantage score. You can also ask before you apply. Or if you have an app, an additional piece is if you have an app that you check your credit score, whether it's your credit card company, your financial institution, scroll. Once you get that credit score, look at the fine print and it will tell you what type of credit score it is. If it's a TransUnion Vantage score, if it's a FICO, Equifax score, and that just empowers you to have a better understanding of what the score is. Does it matter? Typically it doesn't. They tend to be very close in range. So it doesn't matter if you have a 720 here and a 730 there, but it's just good for you to know because sometimes they may not always match. So it's good for you to understand, but for the most part, they'll be in the same range, but very, very rarely. I've never seen it happen to me. Will they all be the same? Okay, so a couple of questions that have come in. One of them was about length of credit history. So I'll start there. So these are all different factors that impact your credit score. The biggest 2 are going to be payment history and amounts owed. So you can see here about 65% of your credit score is based solely on, are you paying your bills on time? Do you owe 30% or less of that credit limit? Length of your credit history, or how long you've had your accounts open, it does impact it. It's about 15%. But it doesn't necessarily mean that you should keep accounts open that may no longer serve you. And the reason for that is it's all going to depend on your credit file. So for some of us, We may have multiple credit cards, multiple student loans, car loans, and our credit file may be therefore a little bit thicker. Because it's a little bit thicker, if I've had a credit card that I opened 10 years ago, and I had another one that I opened 8 years ago, the average length of my credit history is still going to be pretty high. However, if I have a card that I opened 10 years ago and one that I opened this year, and I get rid of that card that I had 10 years ago, then yes, I'm going to lose that credit history, especially if I don't have anything else that could have potentially helped, any other credit information that would still assist in helping me keep my credit score up. One of the recommendations that I have is contact Green Path Financial Wellness. You can access their information on our website. This is free financial counseling that's available to you. We pay for it, so it's free to you. I always get, I know people sometimes wonder, and understandably, we should be curious when something's free. Because technically someone's paying for it, or, maybe it's you in the future or somebody else. But for the free financial counseling, the credit counseling, we pay for it, so it's free to you. You can contact Green Path. I put their information or the link where you can get their information in the chat, and they can actually pull your credit report. They can do a couple simulations to see if it would have an impact if you were to close that account that you've had for a while. I know personally, I have closed many credit cards and my credit score is still very high. But if someone like my brother who didn't have credit for that long closes it, it would have an impact on his score. So you want to check specifically how that would impact your account. The other factors are the ones, though, that are really going to have the biggest impact. Payment history. If you're not paying your bills by the due date, and I'm saying bills specifically for the credit score, and for most credit score models, it's going to be credit cards, student loans, mortgages, car loans, any sort of debt that's outstanding. However, if you have a utility bill, and as I said earlier, you don't pay that for months, that could be sent to a collection agency. But true credit payments, as long as you're making those on time, that's going to help keep your score at the score, that keep your credit score where it is, or help improve it if you've paid late in the past. If you've paid your credit cards or any other credit bill late in the past and start paying on time, you typically will see a credit score increase, but it may take about a couple of months for that increase to appear. The reason for that is your credit score is captured at this moment in time. So if I start paying on time now, well, that's great, but I didn't pay on time last month. So there's not enough time that has passed to show that I am now paying on time. So you have to sort of build the habit before you can see the good results. The other part that's important is how much you owe on your accounts. This is both individually on each account and then collectively across the board on all of your accounts. In the example that I showed with the credit report, the member had, I believe it was a $5,500 credit card limit, and they owed at one point close to $540 or close to that credit limit. That will negatively impact that member's score. The reason for it is that you want to have your credit balance be about 30% or less, could be zero. You don't have to owe debt to have a good credit score. You can use debt, pay it off in full every month, but you don't have to carry debt to have a good score. Now, with that credit, you want to try to keep it at 30% or less of your credit limit. So for example, if I have a $1,000 credit card, I want to keep my balance at $300 or less every month, even if I pay it off in full every month. When I showed the credit report sample, we weren't able to tell that that member if that member paid their credit report in full that past month. And even if they had paid it in full last month, that's not an indicator. That doesn't mean that this month that's going to be the same scenario. That's not going to mean it's going to be the same case. Life happens. So as a result, even though, yes, it's still great, you want to pay off your credit cards in full if you're able to every month, it saves you interest. That doesn't mean that it's going to necessarily impact your credit score positively if that balance is so high that it's close to your credit limit. So try to keep that credit limit at 30% or less. It could be zero. Put something, a monthly subscription that you have on that credit card. If you're not using a credit card after about 6 months or so, that information may not impact your credit score as often. or excuse me, may not have as much of an impact on your credit score. So you do need to use the credit cards. You don't need to keep a balance. The new credit I spoke about earlier, this is when you apply for new credit, not when you, that's known as a hard inquiry when you're applying for credit. Soft inquiry, when you're pulling your own credit report, when Green Path Financial Wellness pulls your credit report to do a credit counseling session. That is for educational purposes and will not impact your score. But if it is you applying for loans, it will impact your score. So that is why we recommend applying during a 2-week period for that specific product if you're shopping around for rates. And then the credit mix I talked about earlier when I've talked about revolving credit, which includes our credit cards, and installment loans, which are more the traditional mortgage student loan payments that tend to be the same month to month. You're paying off that debt in installments. Thank you for clarifying the question. I will address that shortly. Another piece that I want to talk about is the Vantage score. The one I just went through, that example, was FICO. FICO and Vantage, Pepsi and Coca-Cola. Similar, not exactly the same, a little bit different for some. Google versus Bing. The overall pieces are the same. So for Vantage, payment history is very influential. So they don't show the percentages as much. Percent of credit used. Again, trying to keep it under 30%. So I like to share both because many times people just know about FICO, and understandable. So that's what I'm hoping, that additional information now that you know that there's FICO and also Vantage score. Most lenders, about 90%, use FICO, but there are more that I've seen, especially in the past couple of years, that have started using Vantage score. This is an example of actual score summaries. And when you pull your credit report, you're going to get all of the information. You're going to have a chart that will have the cumulative debt that you have, outstanding balances, the monthly payment. Then you're going to have something like this, which is a score summary. And you're also going to have each individual account. There's a lot of information in that credit report. The credit score that you get will be as of that moment. So if you pull your credit score today or your credit report today and then pay for that credit score, or if you go to your financial institution and their app and get your score, it may vary month to month. Typically, it doesn't vary substantially unless there's been a change on your credit report. Now, here you can see the FICO score 8. There are different score models. You don't necessarily have to know them. Just know that just because you have the FICO score, it doesn't necessarily mean that it's the same FICO score that the lender's using. If it's a product like a mortgage, they're going to pull a different, much more credit information. So your credit score may seem a little bit lower than if it were for a car loan or a credit card. For your purposes, you want to focus more on what is the score range, because they're not always the same. More or less, they're around 300 to 850, but they're not always the same. Here we have someone that has a 488 credit score. Reason for that, delinquencies, so accounts that are not being paid. Then we have someone who has a credit score that's a little bit higher, 656. They have public record or collections filed, too few accounts currently paid as agreed. So again, we're seeing a theme here. Paying your credit cards on time helps keep and maintain your credit score high. And it makes sense. If you had to lend money to someone and, think of a friend right now. Now, whoever that friend is, assume that they have borrowed money from other friends and hadn't paid them on time. You're probably going to be less likely to lend to that individual, because especially if you need those funds. So that really sort of makes sense with the payment history piece. As your credit score increases, the score factors are not going to be as helpful, meaning that, there's always going to be something that will be said. Like, you're never going to pull your credit report and have no score factor descriptions. Like, there's always something associated. Here, time since most recent account opening is too short. You may read that and say, oh, I need to go out and apply for loans. You don't need to have debt to have a good credit score. That may be a score factor description, but you have a solid score. I wouldn't recommend applying for more debt just to have a higher credit score. Doesn't necessarily work that way. If anything, it could actually bring down your credit score. And The piece here of recent installment loan information, same thing. Wouldn't necessarily open an account just to have a good credit score. If you already have other accounts, there's no need to do that. A couple of times, depending on your situation, you may need to look into ways to improve your score. Now, the biggest one, even though it's at the bottom, the biggest one I recommend is contacting GreenPath, contacting someone that's a not-for-profit credit counselors. They exist, they're out there, they're focused solely on helping you build your credit score. Now, I put their information in the chat. There are other things you could do, but I recommend first speaking to a credit counselor, speaking to your financial institution, and then seeing based off of your situation, what do they recommend? Sometimes they may recommend a secured credit card, which means I open an account, let's say for $1,000, a savings account, and that then is turned into a credit card. Not technically turned into a credit card, but to simplify it, that $1,000 then becomes a $1,000 credit card. That $1,000 credit card is secured by my $1,000 in that savings account. I can't borrow more than $1,000. If I don't make payment, that lender can access the $1,000 to pay off that credit card that I have. However, there are times that you may not need to do that. There are also special loans, sometimes a credit builder loans, there are debt consolidation loans. These options are very specific. So that's why I recommend contact GreenPath Financial Counseling, Financial Wellness, go to your financial institutions to see sort of what would make sense for your specific situation. Money, especially credit, is personal. What may work for one person may not work for someone else. I'm going to very briefly go into choosing a credit card because it's, when we talk about credit, a lot of times we don't talk about, well, okay, how do you choose the product that's going to help you maintain your credit score, that's going to help you have a good credit score? So I'll go through this and then I will take a moment to go through and answer some of the questions that have come in. But when it comes to choosing a credit card, many times people will focus on the rewards, which it's important. I understand. I'm not saying don't look at those, but this is called a Schumer box. All credit card companies have to provide you this information when you apply for their credit card. Even before you apply, a lot of times it's on their website. So when you're trying to compare credit cards and you're not quite sure which one's the best because there's so much jargon around it, one's talking about rewards, one's talking about something else, take a look at this. It will tell you what the interest and rates are for that card. It'll tell you if there's a balance transfer fee, how you can avoid paying interest. And this is where you can compare credit card A against credit card B to see which one will have the best rates, because that's important to look at, especially right now. APR will vary based off the market with the prime rate. And we're living through that. We're seeing the rates go up. Credit card rates are going to go up, and you want to know, oh, okay, what's the maximum? What could it be? Additionally, you want to know what potential fees are associated with your credit card. With that, same thing. They have to disclose this information to you. If you're applying for a loan, there are loan consumer truth in lending forms that they have to disclose to you that will have a breakdown of this is the loan amount, this is the rate, these are the fees. So just as you put resources into trying to pick a loan, do the same when it comes to comparing the fees, because you want to have this information to help you maintain that good credit score. And if you just don't want to get credit card offers or loan offers, you can also opt out. A lot of people call this junk mail. So you can go to optoutprescreen.com and you can do this for usually, I think it's like 7 years. I forget the exact amount, but there are different options that you have that you can essentially prevent the credit bureaus from selling your information, which then therefore means you won't get credit card offers or loan offers from an entity that you don't have a relationship with. But if you already have an established relationship with that institution, they may still market to you. So this is the opt-out is for entities, businesses, institutions that you don't already have a relationship with. Talked a lot about GreenPath and the free financial counseling that they offer. And I'm going to take a moment here now to answer some of the questions that have come in. So someone asked, how much does your credit score go up if you pay off a credit card? It depends. Unfortunately, I can't give a specific number because your credit score is based off of the other factors on your credit score. So for example, if you only have a credit card and you pay off that credit card, but your balance before was always under 30%, maybe close to zero, may not have much of an impact. If your credit limit was always close to that, if your balance was always close to that credit limit, it will have a much higher impact on your credit score. But if you have have multiple credit cards, like it's very hard to say specifically. So I would recommend contacting GreenPath to see, maybe they could do a credit simulation, or also check your financial institution's website or app to see if they have that feature. A lot of credit card companies now have that feature of that you can select, well, what if I pay off my credit card? And it actually will give you a rough estimate of what your credit score will be. But unfortunately, I can't specify since it's very specific. Excuse me. Someone asked, how long can a discrepancy legally stay on your credit report? 7 years, or can they legally repost it again? Great. Thank you for asking that. So once your account has been on your credit report for the maximum, which I believe it is at 7 years, it can't be reposted. It's actually illegal for that to be reposted. However, keep in mind, something to keep in mind is if I have an account on my credit report and it happened 5 years ago, that is going to have less of an impact on my credit score. So even though an inquiry, for example, stays on your credit report for 2 years and it impacts your credit score about 10%, remember that your credit score is a snapshot of your credit at that moment in time. So if I had applied for a car loan 2 years ago, it's still on my credit report, but it's going to have less of an impact on my credit score than if I had applied for that car loan this month or the last month. So the longer it's been on your credit report, the less likely that it's going to negatively impact your credit score. Okay, another question that came in. If you want to transfer a balance on an existing card to a new card, does that affect your credit? Yes, it does. Now, it's a couple of ways that it will impact it. And this is anytime you apply for new credit, even if it's because you're doing a personal loan, debt consolidation loan, which are all options to pay off debt that you have. Knowing the rates on your debt is going to be important. We do have a couple of refi presentations. I think we may have one scheduled for BILH, but we'll get into more of that detail. But essentially, the higher your interest rate and the higher your balance, more of your payment is going to go towards the interest, which means why many times, especially we see this with student loans, you may be paying like $500 a month, but your balance barely goes down month to month because that interest is what's being paid first. So if you're in a situation that you are paying most of your money towards interest and not going towards the principal, I would recommend looking into perhaps a debt consolidation loan instead of a balance transfer. The reason for that is that depending on the loan balance, you can take the amount that you owe credit card A. So let's say I owe credit card A $10,000. I could go to credit card company B and take out a new credit card that has zero balance. Is a new credit card with company B, pay off or have them transfer, do a balance transfer from credit card A to credit card B for that $10,000. Usually it's 0% for a year. And there is usually about a 3 or 2 or 1% balance transfer fee. So you usually do pay something up front. Now, with the credit card balance transfer, that will impact your credit because now you're closing an account, you're opening an account, and now you have a higher limit on that new open account. Typically, though, if you pay that on time, reduce the balance, it usually will bring up your credit score, but it's not instantaneous. The reason that I always recommend doing a couple of math or seeing if a personal debt consolidation loan is better is that with the balance transfer on a credit card, you have about a year to pay it off. We've seen this past couple of years, how unpredictable the financial and economy and overall healthcare. We've seen all these different changes. So sometimes a year isn't enough, or other expenses may come up. So with a debt consolidation loan, it gives you a little bit more time. It gives you about 5 years, 7 years, depending on the lender, So you're able to reduce the monthly payment and the interest rate. With the balance transfer, if you don't pay it off within that year, then your interest rate will go up. So you may end up in the same position you were before. But we do, for anyone that's interested, you're more than welcome to come visit us at our branch or contact our support center and they can walk you through options, or check with your financial institution as well. Okay, a question came in about commercials that advertise using certain apps that can boost your credit score. Are those safe to use? I don't know if that's the one you're referring to, but I believe Experian has one. I don't think that it's not unsafe necessarily. Like, I don't think it's unsafe. It just, you don't know which credit score it may be boosting. It may not be boosting one that the lender utilizes. So I typically would say, I'm going to go back to GreenPath, contact GreenPath, they're accredited credit counselors. They can give you that information and then they'll tell you what to do to impact your actual credit report. And that's probably a better option because it's much more customized to you. We also have a blog, and the blog that we have an entire section dedicated to credit, everything from credit report to credit scores and much more. One of the questions that came in was regarding applying for hardship, which is a program that collects unsecured debt. And you essentially you settle. So it's essentially debt settlement where you maybe owe $10,000. The organization says, you know what, we'll collect payment. You'll only owe $5,000 now. In that case, it will, after some time, help bring up your credit score, assuming that because you're going to bring down the total balances owed. The challenge with that is that lenders may look at your credit report, which they do typically when they pull your credit report, and decide not to lend to you. They may have a policy, we cannot lend to someone that's settled debt. Or they may say, we may not lend as much as we would want to someone that's settled debt, because your credit report is showing that in the past, you haven't paid your debt you haven't fully satisfied your debt. So in that way, it does impact, it may impact your credit ability to obtain credit and not so much the credit score. There are programs, GreenPath offers them, which is debt management plan. And I always recommend a debt management plan over debt settlement. So going back to that $10,000 example, if it's a $10,000 loan that I have, a debt settlement company is going to say, you know what, only pay 50%. We'll work with the financial institution so they can settle, or so that they can charge it off. Debt management, those are run by nonprofits such as GreenPath. And what they do is they'll work with the lender to try to reduce your interest rate so that if you were paying $10,000 at 10%, they might be able to get it down to $10,000 at 5% or 2%, 8%, it really depends. But the point is, you're still paying the full balance. It is regulated by the federal government, meaning that they'll work with you. They do credit counseling. They do help you come up with a budget. So it's more of a plan to try to get you out of debt. And they're looking at your entire financial situation. So if you're in a situation that you are considering debt settlement, I highly encourage you to look into debt management. It's a service through GreenPath. There is a cost associated. It's $10 per account, but they'll show you the value of being able to bring down the interest versus trying to settle the balance. But that is another option that's available. You can give them a call, get the information. There's no cost to get information. I mentioned this a couple of times, but I want to just end with this piece here, keeping in mind that what I mentioned is educational in nature. I cannot tell you specifically what you can do to bring up your credit score because that would be a disservice to you. I don't know what your credit report looks like. I don't have that specific training. That's why I was encouraging to contact GreenPath Financial Wellness. They are open Monday through Saturday, open late on Thursdays, I believe, until 10 p.m. They're open on Saturdays, so I think 5 or so. They have counselors available in multiple languages that could speak multiple languages. And once you call them, you can call them again. This is free to you and anyone in your household. So maybe you're listening to today's webinar and feel good about your credit score. And even if you feel good about it, you can actually call them and they'll just be like, yeah, everything looks good. But if maybe someone in your household, you're like, oh, this could benefit my brother, my spouse, my child, feel free to refer them over. All they have to do is mention HUECU, and it is a free service that we pay for it as a not-for-profit financial institution. We want you to do well, so we pay for it so you don't have to worry about that piece. That is all that I have for today's presentation. You will get an email by the end of the week with today's recording. You can also just go to our YouTube channel now if you'd like, which I'll also put in the chat, which is youtube.com/myhbcu. And that myhbcu is where you can find us on all other social media platforms if you want to learn a little bit more about any of the different services that we offer. I don't see any other questions at this time. So I thank everyone for joining me today, and I hope you have a wonderful afternoon. Thank you.